I'm Ashton Addison from BlockQuest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Wil Barnes, the CEO of Jet Protocol. Wil, welcome to the show, and thank you for taking the time today.
Yeah, absolutely. Thanks for having me. Looking forward to chatting.
Very welcome. There's a lot going on, especially in the last few weeks here in cryptocurrency, and it's getting volatile and wild, and at the same time, still so many new people are hearing about crypto, DeFi, and jumping in for the first time. I know you have a little bit of experience in blockchain in the past, so I'd love to dive into that. But first, let's just kick off our conversation with an overview of Jet Protocol, what you and your team are working on there, those solutions, and then we'll dive into everything.
Yeah, absolutely. My name is Wil Barnes. I'm the CEO at Jet Protocol. Jet is a non-custodial borrowing lending protocol focused on fixed term borrowing. We use Solana and central and order books to create a market for debt, which is uncommon in DeFi. You mostly see a bunch of interest rate curves used to price debt. We felt that we could offer a more market-based approach, so we put together this new protocol, which we'll be releasing over the next several months. And yeah, looking forward to seeing how our users use these new risk management tools.
Very cool. I love it. And I know you have some experience in blockchain. Maybe you can talk a little bit about how you got into blockchain, what you've been working on, and how that led into starting Jet.
Yeah. So my entry into crypto started way back when I pretty much left college. I wanted to get a job in Wall Street. I really loved just, I always wanted to be like one of those traders with the four monitors, and, responding and trying to get ahead of market events. And, at the time, I spoke in college and in the workforce after the, great financial crisis, the GFC. And it was really hard to get a job. I came from a state school, no one was, I was kind of like joke. It's like, well, you had to have the pedigree from Harvard, all the elite schools to get in. And it was like, this isn't exactly, not really making any progress here. So eventually, I got a tech consulting job at PwC, and I was actually doing tech implementations on sales and trading floors. So I was like pretty close to, I was getting closer to where I wanted to be, and I got to interact with the traders. And this is all around about the time when, this is like 2016, 2017, you start to see, the crypto markets pick up. And, I previously dismissed it, and this time I was like, okay, I'm going to take a look. And I was like, okay, well, no one's really like KYCing you here. Like, there's no barrier to entry. You just like show up, write some code. You can write some algo bots to trade. And I was like, all right, well, done with this whole TradFi thing. Like, I like markets, but like, I really like the openness of this. So, I went full time. I went to work at Consensus in 2017, where I met James, my co-founder, and did security auditing, write code, building protocols, everything under the sun at that time. Then I went to work at MakerDAO, where I worked for this, during which was a very pivotal year for DeFi. You had March, 2020, where the markets just completely broke down, and Maker didn't really manage it well. There was liquidation issues. So I saw all these issues firsthand. I was like a first responder fixing these protocols under pressure. And I wanted to roll all this experience. Well, long story short, I wanted to roll all this experience. My desire to go into a debt capital markets role out of college, finally seeing the opportunity arise, be like, okay, good new tech coming out, Solana, opportunity to build a debt market. All right, let's, talk to James, my co-founder. We just went for it. And we've been, both of us have been in the space for a while, really leveraging the things we saw in past bear markets and bull bear cycles to build a resilient protocol that will, in the next 6 months to a year, really emerge as, something that can, it can be counter-cyclic, can also, lend money at a fixed rate, fixed term to people, which is just, loan is a very common product. Everyone understands that. And really starting to slowly, tap into institutional business.
That's great. Great backstory, Will. And now I want to look at the DeFi industry and how you were looking at it and, working with MakerDAO. I feel like you'd have firsthand in seeing, at early DeFi protocols. Can you talk about how fixed rate borrowing, is the norm in DeFi and how it works, and then how Jet improves on that and makes it better?
Yeah. So fixed rate is definitely not the norm. And it's like, you look at like the big protocols, Compound, Aave, like they have a dynamic interest rate curve. So the utilization of the pool, if people are borrowing, if there's a big pool of USDC, say there's like $10 million in it, if people are borrowing like 9 million, the interest rate on that debt is going to be, really high. Mm-hmm. And, you really have no control over that. If you borrow a certain amount of money and you just forget about it, you're subject to that fluctuating interest rate, which works. It does. Like it's, for Ethereum, where computation is very expensive, it works. Solana is actually a different situation. Computation is cheaper. So you can afford to do more stuff. And that's what our protocol does more stuff. Mm-hmm. And, you can buy debt of different tenors, from an hour, a day, 30 days, 6 months. But say, when you repay that debt, you only have to repay this fixed rate. And that's helpful because as crypto moves into a steady state, people are going to want to lock in interest rates and like have very specific borrowing needs. So they say, I will only want to borrow for a week because I have this trade I want to put on. I'm going to borrow for a week and fix their interest rate. So they have that one leg of the trade is like, static. It's not going to change. It removes some uncertainty. So that's the, big market advantage we offer with Jet V2, which is rolling out over the next couple months. Mm-hmm. I think, I really believe strongly as, crypto native hedge funds have these more intricate risk management needs, they will very much use a product like this.
Mm-hmm. Yeah, it's interesting that you mentioned that about hedge funds and institutions. I feel like they, despite what the spot prices are of some of these major digital assets, they continue to roll in and they continue to see buying opportunities when there's other fear in the market. That's when, you buy blood in the streets. I'm guessing, just with the crypto market crashing in the last couple days here, there's probably even more institutions coming in and looking to leverage their capital as well.
Yeah.
Are you seeing Jet as primary institutionals that'll be borrowing it, or do you think it'll be a mix of retail traders and people that have just been in DeFi?
Initially, we focused on retail traders, DeFi power users. They are very loyal. They get involved. They use your protocol. They offer feedback on Discord, Telegram. They're just, generally very helpful people, very helpful users. So, initially we were built for them. And it was anything, we want to scale. We want to be useful to more than just DeFi power users, right? DeFi power users are very, they know the market. They're, it's like, you can't take them using the protocol for granted, but like with anything, you want to start accessing new customers and finding out what products they want, and then building those products and letting them use it. So the next step is, moving up to crypto native hedge funds, and then even starting to talk to traditional financial funds or firms who want to park capital, and then giving them the conduit to do that, right? And certain funds have certain requirements. Jet, we're going to offer them the ability to be compliant with those requirements. Mm-hmm. And that's that also takes time. The tech has to be built to facilitate that. So it's with anything, it's a process. Start with the people, with the users who are loyal to you, get feedback from them, start reaching out to more and more folks, and then I like just sort of go back to my my story, how I got into it. I'd like to move this into, I very much intend on moving this into talking to debt capital markets institutions and making our solution beneficial to them. as well.
Definitely. And with people borrowing at fixed rates, that capital has to come from somewhere. Maybe we can talk about the other side of the table, and what's the advantage for people that have capital to put it up on Jet as opposed to some of these other lending protocols? Is it just the fixed rate and the certainty of interest, or are there other advantages in storing your capital in Jet?
So we want to incentivize borrowing. So the borrowers will be paying. Borrowers, basically, someone comes to the protocol and say, I want to borrow at this rate. And if there's no one there to take the rate, then there's no borrow that's going to happen, right? So traditionally, you see a lot of protocols do loss leading strategies, right? Just to get that user base and to get users familiar with using the protocol, because this is frontier technologies, bleeding edge tech. It's hard without some incentive in place. Initially, it's really hard to get cash there because you can get yield in myriad of different ways in crypto. So we are looking to find specific types of firms and individuals to deposit for a long term, so that there is capital for people to borrow from. And we do plan on that, but we feel that's only necessary once we have product market fit and a product that is indistinguishable, or that is distinguishable in the market, something that the market hasn't seen. We feel that will give a program like that more value.
Definitely. And you mentioned at the beginning, Will, about the protocol being built on Solana technology and how that lower costs and faster allows you to not have to have the interest rates so variable and just more advantages. Can you talk about the assets? Does that have to do with actually borrowing Solana itself, or does the protocol just focus on stable coins, or what's the variability of assets which can be borrowed?
So for our V1, we launched with just the blue chip assets, Sol, ETH, Bitcoin, USDC. And for V2, we took a very, very strictly on the DAO, right? If you look at centralized exchanges, they have very opaque listing processes. You don't actually know what you don't really know the thought process, decision process to list an asset. So in Jet, which even, today, we have a Jet governed program, our DAO, which is how people vote on listing new assets. And we have a collateral listing process where if you want to list an asset, you have to go through this process, and it's formally defined. And you see this at MakerDAO, which did a very good job at that. They formalize the process. If you want to add a collateral type, you have to check all these boxes and prove that it's secure and the protocol can manage the risk. And we have the same thing, learning on drawing on lessons learned at Maker. And we'll be having our first votes on collateral type soon. And I wanted to say that that's very important to us, because we want everyone to, if you can prove that this collateral type is secure and you go through the process, it'll be added to the protocol for anyone to trade. So that's an approach we've taken that no one else has done, or not to a great extent, is being very transparent and very open about how to get things done on the protocol, which I think is really exciting. The whole DAO space is, there's many different ways to structure a DAO, and we put a lot of thought into how we've structured our DAO.
Yeah, that's good to know, Will, and especially because of the centralized exchange listing process of assets, as you mentioned, you have no idea. It's so opaque on, are they getting paid? Are they friends?
Yeah.
Who knows how the assets get listed and when, and is the exchange buying the assets before they list it? So to have a DAO that's more transparent and democratic is great. And I'm guessing that ties into, the Jet governance token and those holders. And maybe you can just talk about the Jet token, and is that the main functionality, or does it also just work within the ecosystem for lending and borrowing as well?
Yes. So right now the token is, you stake it and you're backstopping the protocol essentially. So if there's any losses, it'll be the first loss. Capital used to recapitalize folks who lost money using the protocol. And because of that, they do earn yield on that. It's it's not a selfless thing and not altruistic thing. Like there's very much a need for that insurance fund level functionality. But when you stake, you also have the right to vote, and voting is we've set the protocol up for its for where it is right now to be able to start voting on collateral types and adding them. And with the voting, with the DAO in place and the ability to vote, people can start tailoring the tokenomics how they like. And we have many ideas internally at Jet. It's also not entirely up to us. One idea we have is fee rebates for people who borrow and stake a certain amount of Jet. And if you're a long-term borrower, that's very attractive to you as well. So that, and there's many different ideas we have, but those entirely up to voters to drive that forward going forward. So it's actually exciting. And I think having it's not a clean slate or blank slate. It's there's a little bit added onto it, but there's many different ways to take the tokenomics going forward with feedback from so.
That's great thought process. I'm looking forward to seeing how that all plays out as you move towards V2, as you mentioned earlier. Maybe you can talk about the upcoming roadmap for Jet and what's coming next in the next version, and if there's any timelines surrounding that.
So for what's on the immediate roadmap, in June we have we've been working over the past 6 months on this new protocol. It's much more powerful. It allows us to collateralize many different assets. Typically, one pain point we ran into developing our V1 was that there's a lot of constraints around transaction sizes. So we addressed that with our new protocol. Now we can collateralize many different assets and use the governance process to start listing those assets. And in addition to that, it has this concept of adapters. So you can do more complex you can do more complex actions. So for example, if you have assets listed on Serum, those will count as collateral in your margin account. And so you can borrow and against those assets. And we, that's the initial adapter that we plan to use. And we have some interesting ideas we'll be talking about shortly about more esoteric adapters that do really cool stuff that the market will like. And then shortly thereafter, the fixed rate, fixed term lending will go live. The order book for that will be after that new program is deployed, and that'll give users, retail and institutional alike, to borrow at a fixed rate, fixed term. And that is, our summer statement. We're really looking to make a huge splash and be at cruising altitude with that come July. So that's the immediate roadmap. And then beyond that, it's introducing unsecured lending. We know in the space there's a lot of institutional borrowers who want to borrow unsecured, and we have a solution there where people, any kind of user can also can collect a credit risk premium from borrowers by pledging collateral to backstop a unsecured borrower's borrowings. It's technically secured, but it's not secured by the borrower in the case of a default. And that will be built on our bond program. And that is super exciting. I really like this idea because we've talked to many firms out there. They want to borrow and they don't want to pledge collateral. We're looking forward to roll out that product for them.
Very cool. I'm looking forward to that. And a lot on the immediate roadmap. All the best with everything there, Wil. For the viewers that are looking to learn more about just fixed rate borrowing on Jet and the updates that are coming out and just getting involved with the protocol, what is the best way for them to learn more and to get involved?
So for the most up-to-date stuff, check Twitter, Jet Protocol, and jetprotocol.io is our website. app.jet protocol is our app. You can find all the information there, including a link to our blog where we have more long-form stuff. But for the most, for in-flight reading, I would say check Twitter.
Mm-hmm. Sounds great. Well, thank you so much. I will leave the Twitter, the protocol website, and the other links in the description box below as well for the viewers. All the best with everything in this fixed term borrowing, everything on Jet protocol. Let's follow up in the near future when all of these updates are coming into the market.
Absolutely. Thanks for having me, Ashton.